Okay, we're here to continue the transactions in chapter 1. I'm starting with transaction D. We got through transaction C in the last video. So transaction D says Net Solutions received cash of $7,500 for providing services to customers. Now, if you read this chapter or read through the chapter like you should have, you know that they provide, I believe it's IT services. So that is part of their business. So that is how they earn money. So earning money and bringing money in is called a revenue, and in particular, it's a revenue called fees earned. So we increased revenue by $7,500, and we received cash. It says Net Solutions received cash, so we increased cash by $7,500. So now again, we can balance our lines. Go from the previous balance line to the transaction itself, and other than the fact that it will make the colors weird. Previous balance line plus any new transactions. I know these are 0, but just to show you. Previous balance line plus new transaction. So we can see here if we balance. So my assets in Excel, I will do some videos on Excel itself, but Excel, when you highlight things, totals it down here in the corner. I don't know if it's too small in the video to see, but this down here in the corner says the sum is 33,850, and that's the sum of all my assets balances. The sum of my liabilities and equity is also 33,850, so our equation still balances and we can move on. Transaction E, Net Solutions paid the following expenses during the month: wages of $2,125, rent of $800, utilities of $450, and miscellaneous. So this is kind of gives it away as to what it is. This is an expense, but there's something kind of odd about this. So an expense is money that goes out, but because an expense is underneath of my stockholders' equity, this is a reduction in stockholders' equity, so this would be a negative number. Technically, I'm increasing the expense, but I'm increasing a negative number. I know that sounds weird. When we get to debits and credits, hopefully it will make a little bit more sense. So I have wages expense of negative $21.25. I have rent expense, negative $800. I have utilities, negative $450. And I have miscellaneous expense, negative $275. So now again, I can sum from the balance line to the next line. Okay, and then it says that we paid them. That magic 4-letter word paid means that I paid cash. Sorry, that's transaction E. I paid in cash. So I need to total those up. I'm just going to do it in Excel here. You can obviously use a calculator. I prefer Excel. So I'm going to do equals 2125 plus 800 plus 450 plus 275. Just a small thing about Excel here. If you want to do math inside any cell, you have to start with the equal sign, and then it knows you're trying to do a calculation. If you don't do an equal sign, it's just going to show you the numbers to type in. But so equals 2125 plus 800 plus 450 plus 275 is 3650. I got to put a negative number in front of those because it is a reduction in cash. I spent my cash. So I'm just going to put a negative number, or you can make them all negative in the first place. Now I can see if I balance again. So some of my assets, my total down here is 30,200. Some of the selected cells, and over here, some is 30,200. So I do balance, so I'm good. Okay, transaction F. Here's those magical words I mentioned in the last video called on account. It says paid creditors on account. So a few words we've kind of covered, and so I'll cover further. A creditor is somebody that I owe money to. Okay, so the creditor is someone that could be a bank, could be a company that I, bought on account from, like I did in this case. Doesn't matter, what company it is. If it says creditor, it means it's somebody that I owe money to. And so specifically, you look in the liabilities column. It looks like I only owe money to one person. It's for that supplies purchase we did in the prior video. And it says the word paid, which means I paid in cash. So cash goes down by $950, and my liabilities go down too. Now think about this. before this transaction, I owed my creditors, I owed this company that I bought supplies from, $1,350. Once I pay them $950, I no longer owe them $1,350, so that's why that's a negative number. I now only owe them $400. When I pay someone part of the liability that I owe them, then I'm going to reduce the liability. So here, over here, I'm just going to bring my totals down again to get my balances, make sure I'm right. Same thing over here, balance plus transaction. Okay, so now highlight this, it's already highlighted. My total is $29,250. Over here, my total is $29,250, which means I balance. Another thing I could do if I wanted to do it, I could always create a line to see if they're equivalent or not. I just highlight, I think it's a little easier, but whichever way you prefer to do it is fine. Okay, transaction G. Says Chris Clark determined that the cost of supplies on hand at the end of the month was $550. Okay, here's where we jump kind of ahead a little bit and it gets a little bit confusing. So think about this, kind of frame this in your mind. So earlier, the prior video, we bought $1,350 worth of supplies. I told you that until we use those are an asset, and that's right. Anything sitting in my supply closet is an asset. I own those markers, that copier paper, those pencils, those notebooks, those 3-ring binders, whatever it is. I own those and I have the rights to them, therefore they are an asset. And supplies are no different. Okay, I own those and therefore I have them down on my books as an asset. But supplies, especially things like office supplies, are used up. Even as accountants, we're not particular enough that we're going to write a journal entry or create a transaction every time someone goes and takes a highlighter from the supply closet. Instead, we're going to wait until the end of the month, the end of some given time frame, in this case it's the end of the month, to go and count how much is left, and then we record how much we used up. Now, once we use up that asset, once we use those supplies, it becomes an expense. It's an asset at first, okay? It starts as an asset, sitting in my supply closet. Once I use it up, I'm using it in the course of business to create revenues, to create profit eventually, hopefully. Then it becomes an expense. So there's two different ways they can say this. They can either tell you this is how much I use, or they can tell you how much is left. But either way, you should be able to come to the number that the transaction is going to be. So in this case, it says that the cost of supplies on hand at the end of the month was $550. That means they went and counted everything in the supply closet and they priced it all. They figured out the value of what was left was $550. So this is the first one where they didn't give us the actual number for the transaction. Instead, they gave us what the balance should be. So after this transaction, my balance in supply should be $550 because that's the assets that I still have. I still have $550 worth of supplies in my supply closet. So I need to figure out the difference between those two. I'm just going to subtract the bigger number from the smaller number to make that easier, is $800. So my actual transaction is negative $800. And just to keep this the same so I can get my balances right, I'm going to go ahead and do the same formula I did before. So I used up $800 worth of supplies, so now I only have $550 left. So be careful with the wording on that. Like I said, they can do it one of two ways. They can tell you what's left, or they can tell you what they used. If they tell you what they used, that's the amount of the transaction. If they tell you what's left, you got to figure out the amount of the transaction. In this case, we had to figure it out, and it was $800. So I used up $800 worth of supplies. Once I use it, it becomes an expense. Just like the other expenses, this is a reduction in equity, so it is a negative number. Oops, wrong line. So we'll see if we balance here. Previous balance plus any transactions that happened. Previous balance equals previous balance plus transactions. Okay, so this is a balance line. And we'll highlight this. Total of that is $28,450. The total of my liabilities and equity, $28,450. So it all balances out. Okay, transaction H, which is the last one of this set. Transaction H says paid dividends of $2,000. Now we haven't covered dividends yet. I do have it up here. It is under the stockholders' equity section. So what a dividend is when owners pay themselves money out of the business from the equity of the business. So from money that the company has earned, generally speaking. It is not paid out of common stock. Instead, it's usually paid out of retained earnings or earnings. So a dividend is just exactly what it sounds like. I am taking the equity that the company money the company has made, okay, they've made either in the past or this year or whenever, and I'm paying it out to the owners. So that's a reduction in equity, that's a decrease in equity, which means my dividend, much like the expense account, will have a negative number in it. So I paid $2,000 worth of dividends. And it says that I paid them, which means I paid them in cash. So cash is going to go down by $2,000 as well. Oops, 0. Okay, so let's see if we balance now. This is the last balance line. All right, so the total here is $26,450. The total over here is $26,450. So we're good. We balance and everything balances out. That's the end of those transactions. We'll continue next with the financial statements.